Yeah. We're going to talk about the types of inducement, vector candles, including vector candles previous day and previous week highs and lows, liquidity cycle, and the key entries.
Key entries.
Yeah. So now these are just a lot of examples, and I'll explain each example. 1, 2. All right. So this is the 5-minute chart, and can you see the MSU that I saw?
FPOs inducement. Okay. Nice. I can see.
Where is it? Can you annotate it?
Yes. Yes.
Yeah. So where's the FATE BOS and the inducement area?
FPOs. Just 1 minute. Okay.
Yeah.
FPOs. Is it correct?
Yeah, that's correct.
Okay.
Yeah. So I kill these, and then I can go on the other chart, the 1 minute. On the 1 minute, it's clearer to see the algo. So right here is the structure high, and this would have been the new structure low, right?
Yes.
And it's confirmed as a structure low because it broke this high. Only because it broke this high, because this was the previous high. Yeah, that was the previous high, and it broke the high. So then it's confirmed that this here to here is a structure. So this is the high, and this is the low of the new structure. Yeah, only because it broke the structure though. So after I broke it, we know that this area needs to be induced. Also, another way to know is because look at this on the second time frame, right? Once you see candles moving like that, like 1, 2, 3, you see candles moving in a order flow pattern, it's liquidity.
Liquidity, yes. Order flow liquidity.
Yeah. And if you see it forming a lot of lows forming at an area, it's also liquidity.
Yes. Okay.
So this is also liquidity. So that means that if you were to take a trade, this is liquidity and this is liquidity, right?
Yes.
And the higher time frame, 15 minutes to 1 hour, 4 hour, they are saying that price needs to go to an area up higher to either rebalance or to clear structure, to clear liquidity.
Okay.
Yeah.
Okay.
So this right here is our true BRS. After both these areas of liquidity got taken, then we can enter a trade.
This area, the last market area, we can enter.
Yes.
Okay. Buy.
Yeah, we enter a trade here because I'll show it to you. This right here is support and resistance liquidity.
Oh, minor. Okay.
Yeah. So after that happens, then you need to look after that happens, you need to look for a candle to close below it. So I clear it for you so you can see it easier.
Yes.
So as this is where the mitigation occurs. This is where smart money traders enter, right? And then they see this bullish block, so they think the entry is good. So they put their stop loss at break even immediately for some reason. So now you know this, you know the truth. Liquidity is taken, price wants to go up higher. So this right here is a second time frame support and resistance zone.
Support on extension. Okay.
Yeah. So whenever we see that, we know that that's not our entry, and our entry has to be a mitigation or a candle close lower. So this right here could be our entry. So after we see this candle close higher than this area, we know that this zone is valid.
This one. Okay.
Yeah. So because these are here equal lows.
Yes.
It's completely different. Equal lows would have to be that, but these aren't equal lows. So after we see this candle close, it has to close 100%. Then you can enter here.
Okay.
Or you can enter whenever this candle close with your stop loss here.
Okay. Market execution. Okay. Is it
Yeah.
right?
Yeah, market execution, yeah.
Execution. Okay.
So, sorry. So right here is where you'd enter. Either there or there.
Okay.
Yeah.
I got it.
So we're looking now and we see a price. I can draw this for you. I'll see if I can draw it for you. We see prices expanding higher. It's going higher, right? Went higher. It gave us the breaker structure here. So now we need to measure our fair value. Our fair value would be from here to here. Imagine that there are no wicks. Imagine there are no wicks. This hits our fair value perfectly, 50%, right?
Okay. 50%.
Yeah. And this is also, if you refine it, if you don't want to look at it like that, then you have to look at it like this.
Oh.
Yeah. But then you would have missed this trade. So the best entry for you, for us, would be here, or after that candle close, we enter here.
Okay.
With our stop loss right here. If it go, our stop loss can't be below this.
Okay.
Because if a stop loss, unless it's for spread, only if it's for spread. But if a stop loss below it, that means this area is invalid.
Okay.
Yeah. So you have to pick the right areas and you have to do it with confidence.
Just by the practice, we can do it.
Yeah. Okay, let's continue. All right. So this cell will be hard to talk about, but in this area, there was a structure that I needed to see taken out, and there was an order block around this area. So draw it over. Yeah, that's what it looked like. So it was a structure here, a structure high, and there was an order block around here. So that's the reason for this trade.
Oh.
Yeah, apart from that, after I saw the rejection candle, this is the key entry. I'll just talk to you about it now. The rejection wick, we measure the 25% or the 50% or the opening. That's when we take our trade.
Okay.
Yeah.
In rejection candle.
Yeah.
Okay.
So usually I take the opening, because if that's the case, this is the trade I would have caught, right?
Oh.
Yeah, to take the opening, or I take the 25%. Or the 50%. It depends on how long the candle is. If the candle is 3.5 pips, I'm taking either the 50% or the 25. But if the candle is just 1 pip, I can take the open, put my stop loss here.
Okay.
Yeah. So let me continue now.
Yes, we can continue.
So right here you can see price made support and resistance once more. Yeah, so that means that this entry is not good. Yes. This right here is a smart money trap.
Right.
So a lot of traders would be looking here because this is where price broke structure. But we know that wherever price breaks structure, price has to induce that area.
Okay.
You see the same thing coming over again, over and over again. This is the last low before price broke structure. So price has to induce this.
That area. Okay.
Does that make sense?
Yes.
Okay. All right, so I'll continue. All right, so this right here was in, or is in another example. I hope you'll see it. But as you can see here, we have a structural high, and above this we have a fair value gap.
Oh, minimum balances. Okay.
Yeah. So if you look properly, you can see from since previous day, price has been creating liquidity, continuing down, down, down. So people want to take sells, right?
Yes. Order flow.
Yeah, order flow liquidity. So now the area of there are multiple areas here that you can say is support and resistance. So you have this area, and then you can draw another trend line. Then you have this area. What is it? Resistance turn support. Yeah. You cannot continue to note the areas of liquidity. Now, what is the direction for price? So on the previous day, price took out a previous day's high. I can't talk about that yet. I need to get further. Sorry, I need to get further on the thing for me to go ahead and talk about that. But for now, I can't talk about that.
Okay. Okay.
Yeah. But just know something significant happened, and that means the bias for the rest of the week is to take sells. So that means that is why this area was valid. So I'll go on the 1 minute to show it to you. And oh, this is 24th. Okay. Yeah. So on the 1 minute, I'll clear these, sorry. So on the 1 minute, sorry, you can see the support and resistance area here, right? You can draw it over. You don't need to draw it over, but you don't need to draw it at all. You can note it that this right here is a support and resistance area.
Okay.
So you know that price needs to grab this liquidity.
Yes.
As long as you see a support and resistance area, it is liquidity. We don't take trades from order blocks there.
Okay.
Yeah, so this right here is also equal highs, support and resistance area here once more. Price breaks out of it, they want to take sells, right? Because price break out of it, they want to take sells, and they want it to retest here with their stop losses above here. Does that make sense?
Yes.
That's exactly what they want. Now, we see that this area here, this last area here of resistance support, that thing was grabbed here. This is the key entry.
Key entry. Oh.
This is a rejection candle. This is the candle that grabbed liquidity.
Oh, yes.
Yes, rejection candle, rejection wick, sorry. We enter at either the open, the 25, or the 50. Any of them are valid. So take a trade here, and you can see that also after price grabbed the liquidity, it broke structure properly. Yeah, so now we know this area is valid. We can enter here, or we can enter based on the retest of, I'll highlight this, retest of this zone. And the reason why I chose this one, the real ideal thing to look for is all three of these, right?
Okay.
Because those are, as I said, those are the last three candles that when it's either it goes into an area of mitigation, which would be this, or it clear liquidity.
Yeah. Okay.
Yeah. So I highlighted this zone because it's the last one, and that's usually where price goes to. So this would be the order block. right?
Yes.
And after we mitigate to the order block, we see that price made liquidity. So this entry is not safe. This entry is not safe. And if you look now, price was creating liquidity.
Liquidities.
So that means that if you're supposed to take a trade, you need to see price to break out here to grab this liquidity, and this liquidity.
Yes. Okay.
Does that make sense?
Yes.
And what you need to see is, I will draw a line. I'll draw something for you. This is a thing that we love to see with our entries. It looks something like this. So we have a build up. I'm just highlighting this. We have a build up. This is just a build up of liquidity.
Okay.
Price breaks out of it, right? People want to take sells. This is where we take entries.
Buys. Okay.
We take the buys because
Yes.
everyone wants to take sells. Now,
Yeah.
a time may come where price may mitigate something and we take the sells, and price can either go like that, because whenever they see price breaks out of this area, they want to take buys, right?
Okay.
Because they're saying, oh, I missed out on the sells here. So they want to take the buys here.
Buys here. Okay. Okay.
Yeah, so you have to think like how the retail people trade and then do the opposite.
Oh, okay.
Yeah. Another way to remember that is that's the LIT cycle. You know REAM FX?
Yeah, I know RAIMFX 6,000K USD
Yeah.
for entity.
This is what he teaches. We have all the information on this course. And this is what he teaches. So the LIT cycle is build up, inducement, and mitigation. And I'll show you. I sent the thing with build-ups inside of the Discord.
Okay.
Yeah, so it's in the Discord, the build-up areas. I'll see if I can show it to you right now, as a matter of fact. But apart from that, so all of this here is our build-up.
Yes.
The inducement is these selling candles, right? And
Yes.
and then this is the mitigation.
Yes. Okay. Then take buy.
Yeah, take buy. Because a lot of people want to take sells once this is broken out of. This is their supply zone. What is it? Support zone. Yeah. So they want to take sells. So that's the exact thing I just showed you. It happens every day.
Every day.
Every day. I promise you. Now you can backtest this as well to see it for yourself.
Okay.
Yeah. So now these highlighted areas here, these highlighted candles are our vector candles. And our vector
candles.
Yeah.
Why it's called vector candles? Can you give me an explanation?
I'll show you for the meaning of vector.
Okay.
I'll show it to you now.
Quantity having direction as well as magnitude, especially areas determining.
It's not one point in space relative to another.
Okay, I got it.
Yeah, so it pretty much vectors. It pretty much rushes the clear liquidity.
Clear liquid. Okay.
Yeah. So whenever you see that, by the way, that means that this whole area here should be a point of entry if we're supposed to look for a trade.
Okay.
Yeah. So whenever you see a vector candle, I like to highlight the last three. So the last three would be 1, 2, 3. These are what I'll be looking at.
Yes. Okay.
Yeah, but whenever you see extremely aggressive candles and they're breaking out of liquidity, just know that a sell is coming. And when that sell comes, bro, it's not going to move slow.
Okay.
So this was our entry, and there's another entry here, because this is the structure, right?
Yes, structure.
This is the structure, so this can't be our entry because it's below the structure. It has to be above the structure. At least 2 pips above the structure,
2 pips. Okay.
at least. So when you see that, we can enter within here, or we can wait until this closes. The candle needs to close above though.
Okay.
It's important that the candle closes above. After that happens, we can either enter here, or we can enter whenever the candle closes and we enter here.
Okay. Nice.
Either that, or we can wait until this candle closes and we enter here. Because there's
Where we should
stop loss here.
Oh, okay. Okay.
Yeah.
Got it.
And if we enter here, stop loss is here. Yeah?
Yes. Yes. Got idea.
Now I wanted to show it to you, the keys entry, and it's in the educational. In the educational, oh, this isn't it. This is the checklist. This is the checklist. Whenever you finish the boot camp, this is your checklist. This is the things you need to see when you're back testing as well. And then oh, sorry. This is our MSU.
Why this DSU types? Why
DSU
MSU is same?
We're changing the name. So right here we have the glossary. So deviation setup. This is the thing that was previously called MSU. Deviation setup. DSU. Same thing.
Deviation. Oh.
Yeah.
Oh, okay, same thing. Okay.
Yeah. It's the same thing. Nothing changed, just the name. Yeah. So, and here we don't need market structure, but David, my partner, he uses market structure, so we go with it. These are the liquidity buildups that we like to see.
Okay.
Yeah.
Yes.
Yeah. So you can study these. I would tell you to study these, and then most likely after you study them, you need to look for the inducement, and the inducement should be a breakout, quote unquote breakout of one of these areas. So either a breakout here, this is inducement. We take the bias. We look for area to buy. Take the bias, and then above this area will be liquidity. Obviously, we can take the sells.
Okay.
Yeah, so it's what happens every day, by the way. And most likely sometimes all of these play out. Depends on the time frame.
Okay.
Yeah. And then these are the timings.
It's converted.
Yeah. So
which is the best sessions for trade for us?
New York, because Frankfurt opens and it clears Asia. London sets the direction for the day at the end of London, and that means that New York either continues the direction for the day, or London is inducement, higher time frame inducement.
Okay.
Yeah, but I'd tell you to study this, and where is the one with the build? Study this and this.
Okay, liquidity buildups and DSU setups.
Yeah.
Yes. Okay.
Also, you can look at the glossary. The glossary has everything in the DSU in case you ever get confused with what it is.
Okay.
Yeah. So I'll get this, and that was 1 minute. And I'll show you that continued. 1 minute continued, part 2. So part 2 continued is this. Can you see the MSU?
MSU. But it's in above area I can see, but in below any area, can I Sorry. Oh shit. You
Yes.
said okay.
Yes. And do you know why?
No. Just give me an explanation for this.
Okay. So this right here is an imbalance fill. I'll just tell you that now. That's what imbalance fill. Right?
Okay, imbalance.
Imbalance fill because
Yes.
between here and here, imbalance. Okay. So price wants to continue lower. So price wants to continue lower. It creates support here.
There,
We know
okay.
that whenever price breaks out of a support, which is this.
Yes. Oh,
By the way, this is exactly what I talked to you about. So this would be the
in this
here to here is the build up. Or you
build
can
up. Okay.
yeah,
And
here to here build up. Build up. So you just need to see a lot of candles at this around the same area in a range, pretty much. That's a build up.
oh, build up is
Yeah. Price creates a build up, right? People say, okay, this is resistance as well. We can take sells. Whenever this breaks out of the support zone, you know they're entering sells right here.
yes.
Soon as it breaks out, and their stop loss is probably around here, right?
Yes.
Now, whenever that happens, we wait until price takes this out, and our stop loss has to be above this area, either above or at this
That's
area.
very
So this right here is our entry. Right after price breaks this, we can take sells.
sense. Okay.
Yeah. So we enter a sell here with our stop loss here.
And where is our next target area?
Sorry?
Where we target if we enter a trade and where we target?
Because
What
this was I'll show you when this was. This was on this day. Right? This is it right here. Same thing. Can you see it?
Oh, same.
Yeah, this, and you know, what did I go on? Sorry. This area is the imbalance fill, and this area is where we're looking at. So this created support and resistance liquidity. This is the support, and this is the breakout. So people enter sells, and then price breaks here. When price breaks here, they enter for buys, we enter for sells right here. And we target, because this was a higher time frame analysis, we're targeting the 1 hour low or the 15-minute low.
Okay.
Yeah, either 1 hour or 15-minute low. Or it's either that or from here to here. I can just do the math right now. Here to here. Now we can count the risk to reward. This is the one risk to reward. Sorry. One risk to reward. This is 1 to 2. This is 1 to 3, 1 to 4, 1 to 5. This would have hit a 1 to 10. It would have taken long for me to do that. We can close it at 1 to 10, whatever you're comfortable with. Or you can hold it until it clears the 15-minute structure.
Okay.
Yeah. So let me go on the 1 minute now. And the 5 minutes, sorry. Is this the right thing? Oh, this was the one we're just doing. All right, so in this example, on my charts, you'll notice that I have black squares. They are just for liquidity.
Black squares.
Yeah, they're just for liquidity for my charts. And for David's chart, he uses purple for liquidity. And the reason why this area is liquidity is, I hope you can see, this is everything here. It's a build up.
Build up, yes.
Right, build up everything here. Now, where was the first area that price cleared the build up? This.
That's it. Okay. We
Yeah,
can
price
note it.
cleared the build up there. And, you know, they would have entered for sells here.
Okay.
And this area also formed support and resistance liquidity. So we need to see price going above this area if we want to enter on sells. And this is a key entry, the wick.
Weak area. Okay.
Yes. So now we wait until price mitigates this area, then we take our entry here. We take our entry here. We can wait until sorry. We take our entry here, or we can wait until another key entry, which would have been at the rejection, or in other words here.
That's it. Yeah. Okay.
Yeah, with our stop loss here, of course. Now, before we see that entry, if you look here, you notice you have the DSU happening here. So this would, yeah, fair break, and that means that this is our area that needs to be induced. Does that make sense?
Yes.
Yeah. So before our entry, we see the DSU playing out.
Okay. Before entry, we want to see DSU. Yes.
Yes. Have to.
Okay.
So it's whenever that happens, you know that inside of this area, by the way, from this low here to this high is where we need to look for anywhere at the 50% is best. 50% of this area is best to see our point of interest, where we want to see price break. Whenever price breaks here, we need to see a pullback into around this area. So our trade would have been this.
That's area. Okay.
Yes. And the reason here, you can refine it, by the way. You can refine this one to this. So that means that our stop loss would have been here and our entry is here.
And this there. Okay.
Yeah. And the area you have to target is here.
Oh, external liquidity points. Yeah.
Yeah.
Okay. I got.
So you take this entry, your stop loss is here, you target here, and you see how fast your take profit is hit. What is this? 1, 2, 3, 4, 5. 25 minutes.
Very fine. So
25 minutes, your take profit is hit. You made money for the day. You're good. Now you can choose to take another trade. I would not recommend taking multiple trades, like 5 trades in a day. I recommend taking 2 when you're just beginning. 2 trades maximum, and either you win or you lose.
2 trades. Okay.
Yes. If you hit break even, as long as you don't lose any money at all, not even for commissions, then you don't consider it a win or a lose.
Okay.
Yeah, only if you hit break even. But if you didn't hit break even, you take a loss, and then you take a win. You're done for the day. No more trades.
Okay.
But then if you take 2 losses, you're done for the day. No more trades. If you take 2 wins, you're done for the day. No more trades. You have to be disciplined.
Okay, discipline. Yes.
So this is the 1 minute for the previous one that we just looked at. So this is the structural low, and it's confirmed as a structural low. Why? Because we broke out of this area.
That's it. Oh.
Yeah. So sorry. So whenever this happens, whenever we see this, we know that we need to see this is our fake break of structure, right?
Fake, yes, fake break of structure.
And this is the high that caused this break of structure.
Yes.
So that means that this high needs to be taken and be our inducement. And either this is our entry, or in this case, the mitigation of this here, this area here, is our entry, the order block.
Okay.
Does that make sense?
Yes.
Yeah, so you see the DSU first, or if you want to see it another way to see it is this right here is a build-up area.
Build up.
You need to see the inducement, which is this. People want to take buys right after the build-up is taken.
Okay.
And then this is the mitigation.
Mitigation. Oh,
And you can take this entry, or you can wait and you can take this entry. Sorry,
okay.
this entry. So what has to happen though is price has to clear at least this area for you to be looking for price to retrace back into here.
Okay.
Then whenever price is retraced back in here, you take your entry with the stop loss here. And you take profit at the same low here. So just look at your risk reward. Your risk reward is amazing. If it does come to a point where you don't want to take any more trades after a 1 to 10 or even a 1 to 20, because this would have probably been a 1 to 20, a 1 to 17.
Oh,
So far I'm at 14, 15, 16, 17, 18, 19. So I 1 to 19. You can close the trade and you don't need to trade for the rest of the day.
yeah. One
Right?
trade enough. Yes. One
What?
trade is.
Yes, one or two trade is perfect for a day.
Yes.
Yes, but after a while, you find it fun. After let's say you risk 1% on this trade, either on if you enter here or you enter here. Let's say you risk 1%, right?
Yes.
What you can
1%.
do if you want to take more trades, you can only risk if you want to take one more trade because you can only take 2 trades per day, right? Only risk 0.5%.
0.5%. Okay.
Yeah, so you don't risk 1% anymore. You risk 0.5. So if you were supposed to lose, if this trade gives you a 1 to 20 when you close here, then you can all you're okay to lose 0.5%, right?
Okay.
Because then you would have 19.5% for the day. So you're still good. Does everything that I'm saying make sense or no?
Yes, a little bit. It makes sense, but after classes, I have come lots of confused. Then I will ask you that confuses.
Okay, no problem.
Okay.
I'll answer. Sorry. This right here is our area. I'll draw it out for you, by the way. Sorry. So this right here is our area of build-up. I'll draw this out for you. Build-up, right?
Build up is.
Yeah, this is a build-up. You can draw it in any way you want. This is a build-up, no matter how you think about it. It's a build-up. So
Build up is.
you can highlight the area of build-up, and whenever price breaks out of the build-up, which is here, this is our mitigation. So build-up, this is our inducement. I'll just highlight this. Build-up, inducement, and then you have the mitigation here.
Mitigation. Yes.
Whenever price gives you the mitigation, it always mitigates something, by the way. So instead of highlighting the order block, you could have highlighted the fair value gap right here.
Yes.
Does that make sense?
Yes.
Then our entry could be here with our stop loss here. And that's a good trade. Perfect trade. So let's say price cleared the build up here. Let's say price went out, gave a breakout here. That means that we'll have to look for buyers.
Buyers. Okay.
Yeah. Yeah, but because the higher time frame is saying to take sells, and we get this. Another way to see it, this is the way I like to see it, with the build-up, inducement, and mitigation. But this is also the DSU. So this right here is the fake break, and this is the second type, because this is the structural liquidity. This is a structure.
Yes.
So this is where we have the freight break. This is where we have the area that needs to be induced. So whenever that is taken, then we can take the trade. It still taps into our supply zone. So it's perfect. So do you understand that one or no?
Yes.
I think this is our best example of it.
Okay.
Yeah. And now you have different type of inducement. So, you know, the structures that you look at play a big part in the type of inducement. So on the 1 hour to the 15-minute, they're considered medium inducement. So they don't.
Okay.
Yeah. So they don't last for long. It's not for a long time. It's just medium. The major inducement. Sorry?
Can I take 2 minutes rest because I want to drink some water.
Yeah, no problem.
Okay, just give me 2 minutes.
Yeah, no problem.
Okay, thank you, bro. Shall we continue?
Okay, bro. So, as I was saying, this is the medium inducement. I'll show you it now, and I'll show you all of the different type of inducement on the charts.
Okay.
But this is an example of the medium inducement. This is the 1 hour high.
1 hour high. Okay.
Yeah, and then that would be that this is the 1 hour low, right? You can look at it like that. This is formed as the support and resistance zone, by the way. So that means that this area, if you're looking at the 1 minute, this would have been the structural liquidity that we'd like to see price take out. And then what we'd like to see is I'll highlight the area that you need to look at. If you were to ever look for an order block, this is the area, right?
Oh, last buys. Okay,
Yes.
Yes. Okay.
But the thing is, because this is the area for higher time frame, this is the area of inducement, because this is the first break of structure. This gave us the first break of structure to the left.
Yes. Okay.
Okay. So when you see the area that gives the first break of structure, it is always inducement.
Always. Oh, okay.
Yeah. So this area needs to be induced. So then it is considered as a medium inducement.
Medium inducement. Okay.
Now, whenever price induces an area, it's going to look for another area to induce. So this is the area, this is the last structure that gave the break of structure.
Yes.
Right?
Yes.
So that means this is the area that needs to be induced.
Induced. Okay.
It's just the same thing over and over again, I promise you, on every time frame. So price is fractal, you know that.
Fractal, yes. Price is fractal.
So everything happens on every time frame. So you can see it on the same time frame. You can see it on the 1 hour, the weekly, the 1 minute, same time, any time frame. It doesn't matter. Now, a major inducement would come from a previous day, either previous days or previous week, high or low.
High and low. Okay.
Yeah. So on the previous, you can see it on the 1 hour. It doesn't matter where you see it from. On my chart, I'll just show you my chart, how I see it. I use the 1 hour instead of the 4 hour or anything similar to that. So I have this indicator where I can see the daily. I apply the weekly and the daily opening to see. So I can see a last week's high and a last week's low, stuff like that. Either that, or you can do that, or you can also, the simplest thing to do that everyone else does is, let me hide the indicators. They highlight or they draw a line through the high. Let's say this is the high of the day, this is the low. They put a line to the next day and they highlight it as PD, previous day high, PDH, previous day high, or they highlight this as previous day low. And they do that for every day to know what direction is price going into. Price grab this previous day low, and then price is beginning to go high. Right?
Yes.
Price is beginning to go higher. So why? So that means that you can't be looking for sales. So you know the direction for the week just based on that. So you just need to see you just need to see one area of inducement for the week. And that is this area. This is the inducement because this is the previous day. This is the previous day low. Price grabbed it and then price aggressively started to move forward. Now, if you remember, I told you the first area of a breaker structure is always inducement.
Inducement. Yeah. Okay.
So if you look at the candles on this area, this is our structure, right? Look at the candles on this area. You can see it for yourself that the candle of this area went higher. And it is confirmed that this is our fake BOS. Either the candle or the wicks. Yeah. But yeah. So you see this area, fake BOS, that means this area is going to be broken. This area is already broken, but this area should give us our true breakoff structure. Right?
Yes.
So whenever that plays out, that means that the inducement has to be at this area.
Inducement, okay.
Yeah, so because price also gives us another fake BOS. So if you minimize it, we can minimize it now. Sorry, I'll minimize it now. I'll go on to 5 minutes. You can play whichever one is clear to you. So I'll show you two different things right now. This is a build-up.
Yes.
It's a build-up, and then that means that price is going to aim for the next structure, which is here. Here, this is the structure price is aiming for. It has the build-up. You know that once price breaks out of the build-up, the direction it goes in is never the real direction. So if price goes here, this is not the real direction that we need to be taking trades from. You need to be looking for longs, but you have to look for longs whenever price breaks out of the structure.
Yes.
Or if you want to look at it in the DSU format, this is the structure, right?
Okay.
So I grab this one. This is the structure, and where is this? Sorry. So this is the structure, and price, if price clears it, fake BOS immediately. So that means that this area is our inducement, area of inducement.
Area of inducement, okay.
Yeah. So whenever price grabs that liquidity, we can either look for sells. You can either look for sells, and the sells make sense also. And I'll show you why. Sorry, I'll show you why now. Simple way. Look at where the candle closed.
Yes.
Yes. 100% fill on the imbalance, right?
Yes.
Yeah, so you can take a sell here. And the reason you don't take a sell like here, you can see it doesn't. Look at that. It's either at the 50%, price needs to fill in balance at the 50% or the 100. Now, if it goes above it, these are equal lows. These are equal highs right here and here. If it goes above it, but it goes below the 100%, then it's not the real mitigation. It has to land at exactly 50% or the 100% with the candle close.
Oh.
Only the candle close.
Okay. Candle close.
Yes. So let me get back on topic. So this is our fake BOS. This is our area of inducement. This is the area that needs to be induced. So whenever price grabs this liquidity, we can look for longs, we can look for bias. Right?
Yes.
And it's either you see a structure, you have to see structures again. So after you see this is the break, this is the structure, right?
Yes.
So where's your next point of interest? Your next point of interest, let me grab this, let me go over, and I need to clear these. I'll just clear all drawings. Yeah, sorry about that. Your next point of interest is in the fair value between here and here. Now I'll do this.
Okay.
And you wait on the candle. So look at this line here. This line here is a 50%.
50%. Okay.
So that means this is liquidity because the candle never closed there. Only the wick. And this is the real entry. So that means whenever this forms, you can take entries around this area. It creates liquidity, yes, but the higher time frame or higher time frame narrative, this is our inducement, right? So that means that this area here, I'll show you on the 4-hour. What do you see on the 4-hour?
Oh.
Let me just play this back. If you were to just look here, what do you see on the 4-hour? Imbalance here.
Imbalance, yes.
But then if price goes above the imbalance, right? This here is liquidity. Everything here is a build-up. I'll show you on the 1-hour. Build-up. Trend line.
Yes, trend line build-up.
So if price goes above the imbalance, which is between here and here, if price goes above it, price breaks out above it, then price is going to clear this area. 100%. And if you look here, here and here, support and resistance liquidity.
Resistance areas.
So if price is supposed to mitigate anywhere, it can come back within here. It doesn't have to. It can come back within here. It can either give a rejection or it can play the trade out. Which when you look at the 4-hour, it doesn't make sense for it to. Oh yeah, it does make sense for it to play out. This should be a key entry on the 4-hour.
Oh.
Yes, but we know that this is an area of liquidity. It's also support and resistance liquidity. So you can draw a line out as liquidity, higher time frame liquidity. So price, you can take buys to clear out this area. Yeah. Does that make sense?
Yes. Now it's making sense more and more.
Yeah. But I have you, man. If you ever need any help at all, I'll always be here to help you because you paid your money. You didn't pay your money to be scammed or anything. So I'll always help you.
Okay, thank you.
Thank you as well, man, for trusting me.
Yes.
So as I was saying though, I'll do this. Weekly and daily highs and lows are, whenever they're broken, are considered inducement. Are considered major inducement. Weekly, monthly, and daily high, but I don't look at the monthly time frame to tell you about the monthly, but they're all major inducement. So what you need to see is the vector candle is the candle that quickly rushes out to clear liquidity, right?
Okay.
So you can see from here, you don't need to look hard, that this area here is obvious liquidity.
Liquidity, yes.
So whenever price breaks out of its liquidity, you have the Victor candle. This confirms our entry. You just need to see a Victor candle and it taps into an order block. Then it confirms our entry. Price is fractal, bro. Same thing every time frame.
Same thing, yes.
Yeah. And if you want to see the other way, then this is our build up. And that means that this area is our inducement with our vector candle. That's the area of inducement, and this is the area of mitigation.
Mitigation, yes.
Yeah. So whenever this happens, everyone wants to take buys.
Oh, okay, that's
Everyone wants to take buys because they're saying, okay, price broke structure. So you have to think like that. Think like how they think, then do the opposite.
okay.
Yeah. And the minor inducement, they occur on the 5 minute and 1 minute. These are the inducement you see every day.
Daily, okay.
Yeah. Also, do you have Telegram, right?
Yes, I have Telegram.
Okay, I will send you a little gift on Telegram. 2 gifts on Telegram.
Okay, please.
Okay. So
I will share my ID.
yeah. And for the LIT build up, this is what Reem teaches in his course. This is exactly what I just showed you. So you have the build up phase, the build up. Whenever price is building up, the stop loss is to get hunted. That's the build up, and the inducement is whenever price breaks out the build up. So whenever price breaks out of this, retail traders want to enter and buy, right? And they want price to form support and resistance. So what they look for to happen is price to come back here, mitigate, and go higher, right?
Yes.
That's what they want. But we know that whenever price does this, we're going into an area of supply, hopefully, and then we take the sells here.
Sells, okay.
Which is what happened here, the mitigation phase. This is our entry. Take the sells and we're good.
Oh, this. Okay.
Yeah. So you can just wait on this to happen. Train your eyes to see it, by the way. You can't see it. You won't see it in the first week until you have to train your eyes perfectly to see it over and over again. It takes a lot of time, I promise you. But whenever you get it, you'll see better trades over and over again.
Okay.
So you see this, or you can train your eyes to see the DSU. Train your eyes to see both. So trading becomes easier for you whenever you see both.
Okay.
Now I already talked to you about the key entries. So the key entry is taking a Fibonacci and entering from a rejection wick and into right wick. Wick on either the open, the 25% or the 50%.
In this one, okay, 50%.
Yeah, the 50%. I enter on the 50% only if the wick is like 4 pips. Then I enter at 50%, so I can have a 2 pip stop loss.
Okay.
Yeah. And that's the end of day 2. So we will continue with day 3 on 2 days from now, Friday.
Okay, Friday
Yeah.
night.
Friday at this same time, 9:30 by time.
Okay.
Yeah. So
9 a.m. is my time. Okay.
yeah. So I'll see you on Friday, bro, and I'll send you the little gifts now.
Yes, I shared my Telegram ID.
Okay.
Okay.
Okay, I'll send it to you through Telegram. And
Thank you.
I don't usually do this, but I do it only for you.
Thank you, bro. Thank you. It's very pleasure to hear.
You're welcome, man. No problem.
Okay.
I'll see you on Friday.
Okay, bro.
Okay, bro. See you.
See you.
Thank you for coming to the meeting.
Most welcome.
See you, man.